Hello, and welcome to the last episode of Season 5 of Friday Drinks. This week, we are fortunate to have been allowed to film in the CABS auditorium. Thank you very much to CABS for hosting us. We also have among us better looking faces than these two mugs. So at some stage, I'm sure the camera will pan around and you'll be able to see part of our studio audience who later on in the show will have a chance to participate. It's been an interesting week. A lot has happened, but we're not going to talk about what's happened this week. We are going to, we're at the end of the year, we're at the end of a season. Many of us in our day jobs are starting to plan for next year, budgets, strategy sessions, etc. So today we're going to talk about some of the things we should be considering as we're starting to think about 2023 and beyond, especially in the current environment. The world is upside down. You're starting to see global inflation picking up. When you come closer to home, we've got lots of things happening. Can you believe that just 9 months ago, the official rate was 108 at the beginning of the year? And I mean, I believe this week it went over 600 on the auction. Who knows where we're going to be by the end of the year? But Jagarongi. Keep calm. But we've also had lots of other interesting things going on. We've seemed to have forgotten about the maize harvest this year. I think we've all just accepted that it's not happening. But certainly the numbers that are coming out of the GMB are in the region of 130,000 tons of maize have come in September, which is well short of the 2 million we need.
You mean as of end of August?
Sorry, correct, end of August, which is well short of the 2 million we need. But of course, Ragarongeka, there are farmers who are still holding on to their grain. They haven't finished harvesting, you know, all that sort of stuff. So in that environment, and we've got an election coming up, with all these moving pieces, how does a business go about planning for the new year? We'll start with you, Tinashe.
Okay, thank you very much, George. Yeah, you're quite right. I think what we've seen this year, if it's an indication of what's going to happen in the next year, then, you know.
Inflation is going to be 35% by the end of the year.
But I think context is everything. And I just want to remind, don't shoot me, but context is very important. So I just want to remind everybody who's got some sort of business or running a business in Zimbabwe, that Zimbabwe has never had a low inflation environment, like for the entire 42 years. If you look at the first decade, the average inflation was 13%. That's the first decade. And that's supposedly the best decade we've ever had. Well, inflation was actually higher than America's inflation rate or the UK's inflation rate. So you know how everybody around the world is making a big cry around global 8%. Inflation, 8%, 9%, 11%. I think the UK went as high as 11%. But we had a first decade of inflation at 13%. And then the second decade was inflation actually doubled to 28%. That the average inflation rate for the second decade was around 28%. And the average interest rate over that period was around 30%. It went as high as 42% in the second decade. In the third decade, we all know what happened. We became the second highest inflation rate in history, right? In history. And then in the fourth decade that we just passed, inflation rate was on average around 40-something%. I think it went as high as 800%, but came down. So I think it's safe to assume that in the next decade, or this decade that we're going through, that it will be a high inflation environment. It's an aberration for us to have low inflation. So I know the glory years between 2009 or 2010 to 2013, and we look at that as, you know, low inflation. That was an aberration. That's unusual. When you're trading in Zimbabwe, it's highly unusual. And I know we are very personal. We've personalized the Zimbabwean scenario because we're optimists generally. But if this was any other country, if this was Uganda, if you're looking at Uganda and I gave you those stats, you would have a better understanding and you would not have any qualms or any optimism as far as the inflation rate is concerned.
Well, you mentioned Uganda.
Yeah.
They've had single-digit inflation for most of the last 20 years.
Exactly. And you can make some sort of prediction about the environment. All I'm trying to say is that
the sky is falling?
No. That when you're trading in Zimbabwe, just know that it's a high inflationary environment.
I think you're making up your own question, aren't you?
And you can make context. I say
Bottle of
context
whiskey.
is very important.
Okay.
Because if you lack context, then you're
Okay.
So the idea is contextualize what Zimbabwe is. It doesn't mean that you cannot make money or you cannot, but or have a strategy. You can have strategy. There is some sort of certainty. So I don't actually buy into the idea that Zimbabwe is highly uncertain. No, it is certain. It's going to be high inflation. The next decade is going to be high inflationary environment. That is just who we are. If it's lower than 10%, then that's okay. That's fantastic. But that's more an aberration than it is the truth. So that context is very important when we're looking into next year. So what I'm trying to say is if we're planning next year or planning going forward, it's high inflation environment, high interest rate environment. Those are the things that we need to.
So in other words, don't believe what you read in the paper.
Well, the papers are telling us that interest rates are 200%. So believe that.
No, but they're also telling us that next year is going to be great.
No, that's just one section of the newspapers, not all newspapers. So I would say that that context is very important, that we operate in a certain environment and we just need to adjust ourselves according to that particular environment.
I'll push back on uncertainty. I think there's a lot of uncertainty in our country, in our market. I think if you were to ask me what the policy around exchange rate is going to be in 30 days, is it going to be the same in 3 months, a year from now? I don't know. And I don't think anybody can say with high conviction that they know what the policy framework is going to look like over the next 12 months. So I think from that perspective, there's a lot of uncertainty. We don't know what the rules of the game will be in 30 days, let alone 3 months or 1 year.
But is there a chance that the rules are going to change for the better?
It's possible.
Well, can I give you another interesting statistic? Over the last decade, so since 2009, 2010, we've changed the exchange rate regime about 5 times. We've had 5 different currencies. It's safe to say some level of certainty that is going to change again. Right? So what I can't predict, I can't predict when. I can't tell you that in April it's going to change, or in 2022 or 2024. But I can tell you that in the next 2 years it's going to change, not once, but
a couple of times.
A couple of times.
And this is the exchange rate regime. This is the currency itself.
The currency itself is going to change. The exchange rate regime is going to change.
So,
but can you tell us what kind of change we're going to see?
Okay, so what's...
So that's the uncertainty.
So how would you be planning?
So I think you're looking at a scenario where there's lots of uncertainty, there's lots of risk. So I think it's important to batten down the hatches, pay down debt, have a structure that is as lean and cost efficient as possible, because there's a good chance that the changes that we're going to see in the next 3 months, 9 months, 12 months are going to be unpleasant for your business. So your business has to be geared to survive unpleasant disruption.
So reduce, what did you say? Be lean, pay down debt.
Yeah, have a cost efficiency. Just basically batten down the hatches.
But should I be paying down Zim dollar debt?
Yes, because you can wake up tomorrow and the interest rate is 500%.
But
it might not happen, but
inflation always be higher.
Well, if you look at what's happened over the last 30 days, for example, you've had the government decide not to pay any of its suppliers.
George corrected that in the press. He said they are paying 60 to 70% of their bills.
Okay, but that's still significant. It created a crunch in Zim dollar liquidity. You saw the power market rate pull back from 800 to as low as 690, 700. So if you were running a business that had Zim dollar debt and you were expecting to service that debt with your cash flows from business with government, you probably had a really rough 30 days. And we don't know when it's going to be normal. It could be another, this rough 30 days could extend for 60 days or 90 days. And
when you look at it over a medium to long term period, have we ever had positive real interest rates?
In the 90s we did, briefly. But in fact, that's what reduced inflation. But, this is not a history lesson. Just going back to what Rufaro said, I am of a different view slightly. I think that as Zimbabweans, we've actually built a competence that the rest of the world doesn't have. We know that the rest of the world is going to be in a global stress for a while, high inflation, high interest rate, that sort of thing. But we've built a competence that we can use. You can actually make money out of the competence that we've learned in Zim.
And that is?
Let's export the skill set that we've learned over the last 42 years elsewhere.
What is that skill set?
It's managing or running a business.
A house on fire.
High inflation. So if you were to go to Kenya, if you were to set up a business in Kenya or elsewhere in Africa, I think we'll do relatively better because those countries don't understand what it means operating in a high inflationary environment. We now actually do. We know exactly what to do. But it doesn't make sense to continuously be in Zimbabwe because if you think about it, it's 15 million people. We're not growing, right? If you look at the economy, it hasn't grown over the last 42 years. So I think that Zimbabwe is a perfect case of you build a competence, yeah, but I think we need to export that competence. Our companies need to really look abroad, see what's happening across Africa, or perhaps if it's resources. But if you think about resources, let me just give you another interesting anecdote. I was looking at the numbers, how many gold in South Africa, right? And their average gold recoveries that they're making, this is the average for the entire company. It's 5.2 grams a ton, right? And that piqued my interest because in Zim, we're probably getting around 2.5, 2.6. A lot of the gold companies, that's what they get. So it piqued my interest and I started asking geologists, why? What's wrong with Zimbabwe? Why would the gold mine in South Africa be double than Zimbabwe? It doesn't make sense. And they were like, well, actually what has been happening around the world in the last 10 years or 20 years is there's been massive exploration and Zimbabwe hasn't done much of the exploration. And I was like, why are not the big companies doing it? It was like, okay, I've been involved in the DRC exploration. And we spent $250 million in gold exploration in the DRC. It's like there's no one in Zimbabwe who has spent more than $2 million in gold exploration. It says that's the problem. That's why our grades, it's like we know for certain that the grades in Zim are better than the South African grades. We know that, but we haven't done the work that's needed because you need to pour in money. So the point I'm trying to make is... I was going to ask what the point is. The point I'm trying to make is we are finding ourselves as business or as Zimbabweans trying to make Zimbabwe work when actually the rest of Africa is working and it's working very well. And with our skill set, with our competence, we've got the skill set. We're better off going to the DRC, going to Ghana, and making money out of those markets than remaining and...
What about fixing...
So where Rufaro is saying, consolidate, batten down the hatches, you're saying... So he's basically saying, do what you're doing well in Zim, and you're saying, forget Zim. Zim's never been good to you.
Zim has only been good in one respect, building a competence. And you've got a skill set that is highly valued elsewhere. Whether it's business, it's a market. So if you're selling a product in Zim, you're only selling to 15 million people. If you go to the DRC, those 15 million people suddenly become 87 million people.
No, it's 100 something.
Well, there you go.
15 million people is a population of Kinshasa.
There you go.
And of the 15 million, 3/4 live in something like a 13-kilometer radius. So it's really easy to get to 15 million in the Congo.
Exactly. So I'm just saying that I think that we've been in Zimbabwe for far too long, and unfortunately we become a hedgehog. So there's this idea of, do you become a hedgehog? Which I think that's what Rufaro is arguing, which is, but not necessarily bad.
Some great businesses have done this. So 15 years ago, the Insco Group did this. Delta's done it. EcoNet has done it. And they've built fantastic businesses from focusing in turn and just doing what they do well.
That's the time when they were growing, right? From being small businesses to a relatively sized business. But for them to get their growth, they're not going to get their growth in Zimbabwe.
Yeah, but I run a bottle store.
Yeah, you can remain a bottle store if those are your ambitions. Sure, George. But I'm just saying that you're putting to waste a good skill set that you got from operating in a highly volatile environment with high interest rates, and we're going into a world where it's actually high interest rates, high inflation, things that we are very, very comfortable with, very familiar with.
Negative real interest rates.
Negative real interest rates. We're very comfortable, around that. We know when to borrow,
and we know when to pay back,
and we know when to pay back. But I think it's a perfect time for a Zimbabwean business to go abroad. That's my argument.
And abroad.
I mean, just
the region or the world.
Well, if it's a skill set, then it can be the world, right? You could be in the US, you could be in the UK, or anywhere else in the world. I think that your skill set is highly valued. If you're a CA, you're better off in the UK or elsewhere. But if it's a business, I think across Africa, there's a huge opportunity there. If it's a business, again, the other outsourcing business, just another anecdote that might be useful is that the ICT industry in Nigeria now contributes 18% of their GDP, right?
1/8.
1/8. Guess how much the oil industry is contributing? The same economy.
Less than 10%?
Yeah, 6%. What happened over the last 2 decades?
They grew their tertiary services sectors.
Absolutely. And in Zim, do you know what's actually been happening? Our ICT has actually been regressing. So it was the fastest growing in the last decade. But over the last 2 years, it's actually regressed from 7% contribution of GDP to 5% contribution to GDP.
Well, but that's because other sectors have grown. How many billion mining economy? We're driving for that. But let's let these good people that have come to visit us today participate in the discussion.
At a funeral in the rural areas, there is a lot of work to be done. Fetching water, firewood, stones, bricks, and other things to save for Tonde. Tonde is sitting down where the elders are sitting. The young men are not happy with this because Tonde is the only one who knows everything that needs to be done as the mourners wait for the body of the deceased that is still to come to the rural home. The elders are keeping him close and constantly consulting him.
Listen, Zimai. You see, among all these old men, nobody knows how your late brother's funeral policy works. Tonde here is a friend who works at Nyarazo. The friend is helping us with all the information, so we need Tonde close to us. You should be thanking Tonde because everything is circuitica nyore.
Neni Osekun, I just remembered that I have a friend at Nyarazo. Maybe I can help if Tonde can't find his phone.
Introducing Sawi, the chatbot from Nyarazo. Speak to SAWI for all your queries and inquiries. The benefits of having SAWI by your side are endless. When you need to know about our policy, Nyarazo products, payment platforms, claims, the Sawira International Plan, where to find the Nyarazo branches, Nyarazo contact details, how to apply, and any questions you may have. And she can help you find who you want to speak to. For your convenience, you can ask about anything, from our funeral services, counseling to your payments, and much more. Experience the benefit of having SAWI by your side. App SAWI today on WhatsApp number 0712 992 892. Nyarazo, Sawira Mukuru, Omgane Omkulu.
Questions? Contributions? Thoughts?
On the high interest rates and high inflation. What we have seen in the last 30 days is an acceleration of the re-dollarization of the economy. So when we then talk of high interest rates, high inflation, which color of money are we talking of? Are we talking of our money or?
Yeah.
It's all our money.
Yeah, that's an important question. But if you look at, even in US dollar terms, the interest rates right now are at 12%. This is for your AAA rated big corporate. They're being charged 12% per annum. If you were to go to Kenya for US dollar loan, you're getting 6% in Kenya, right? So Zim is still high interest rate, even in US dollar terms. And the big question is, how much can you get in Zimbabwe? To give you a bit of color, our total loans and advances in Zimbabwe, including US dollar and Zim dollar, it's less than $1 billion at the moment. Equity Bank, and that's the largest bank in Kenya, its total loans and advances is $5 billion. Kenya's total loans and advances is $30 billion. So you're in Zimbabwe and you're continuously, and I know, you know, this is Cabs. I'm sure Cabs is not like this. But continuously you're a business and continuously you're not getting the money that you want from the bank. Continuously they're revising their limits downwards, not upwards. The number of hurdles you have to, jump just to get a loan in Zimbabwe. If you were in Kenya, similar sort of business, everything. If you were in Kenya, banks will be coming to you, not the other way around. So while you're right that the Zim dollar is going away, yes, it's going away, but we'll have a new regime very soon, like we said, probably in the next 2 years. There'll be new exchange rate regimes. We are pretty certain about that. But I think that even in US dollar terms, we're still operating in a high interest rate environment compared to the rest of the world. If you're in horticulture business, so just one, and then you can. If you're in horticulture business, for example, and they say you're servicing the UK, you're competing with someone in Kenya. Someone in Kenya has got an interest rate of, 8% at most, and you've got an interest rate of 12%. Already you can see where you're at a disadvantage.
Just to add very briefly to what you said. So, Zim dollar rates have always been negative in real terms. Even now, people are screaming about 200%. The inflation is
285?
285. Official inflation. So, Zim dollar interest rates are negative in real terms. But US dollar interest rates have always been positive in this country because there's a massive risk premium. Anybody with US dollars can take them anywhere in the world. And if they decide to bring or keep their US dollars in this country, they are demanding a massive risk premium for the fact that the governor or the minister of finance might wake up any day and change the rules in their US dollars. So it's very expensive to borrow in dollars in this country.
So the next question that I have relates to when you look at the Zimbabwean economy. I'm not too sure how Kenya is structured, but when you look at the Zimbabwe economy, it's almost very informal when a lot of the business is now going through the informal market. So you are probably then not able to say how much is going through the banks, how much is deposited in the banks, because we all have a lot of our money under our blankets, which probably kind of changes that analysis a little bit.
Okay.
This is a perpetual debate among us about whether we are capturing the informal economy or not. So maybe if you could briefly, and then I'm sure Rufaro would want to, I know you're going to rebut what you're going to say.
No, which is perfectly fine. I think that's necessary, actually. So the way we measure GDP, there are many ways in which we measure GDP, but we usually use 3 ways, which is from a consumption perspective, or from an income perspective, or from an expenditure perspective. So informal, it's very difficult to measure informal when we're measuring it from an income perspective, because we don't know what they're in. But from a consumptive perspective, we sort of know, because almost everybody in the informal sector, except India, I think India, Bangladesh, they've got, the way they're structured is a little different, where somebody can be totally outside of the formal structure. So if you're looking at, let's say, milk, at some point, everybody in Zimbabwe drinks milk and buys the milk from.
She's very happy to hear that.
But so what I would want to hear is, if we look at milk from a consumption perspective, how much would you say is not in a formal structure? So not for, not domesticated cows where it's for your own consumption, but where somebody is actually taking that milk and then selling it, and they've got in an informal settlement, and it's not in any way in the formalized structure. How much of that milk is part of, I would hazard that it's probably less than 1%, because actually milk, proper milk or milk substitutes are cheaper from the stores than, from the cow. So I would still say we're capturing milk.
So your point is
milk consumption.
Your point is at some stage the informal sector interacts with the formal.
Yes.
From a consumption point.
From a consumption perspective, but not from an income perspective.
So we capture it with GDP that way.
Yes, that's how we capture it. So even given.
Can you bet to first?
No. I just wanted to put the caveat that I still think that our economy is still $15 billion, but if we consider all those other factors, it could get to $16 billion. But I don't think it's anywhere above $17 billion. I don't think so. So it's still smaller than Kenya and elsewhere.
Yeah, so I tend to differ with Tinashe on this, because I think that the extent to which, I think he tends to overstate the extent to which the informal sector interfaces with the formal sector. So just to use the example that, of milk, if somebody is importing milk from South Africa informally and bringing it through a bus and selling it, in the informal sector, that's one unit of milk that's not coming out of any of the formal producers, and it's not recorded anywhere. And I think there's a lot of stuff that you'll find in Pick n Pay and OK or the formal consumption sector that is available as well in the informal sector, and it never went through any formal Zimbabwean business. So, so I think it's an unknown, to what extent the informal sector interfaces with the formal sector. And it's quite possible that the Zim economy is growing, and that growth is happening in the informal sector, and it's not captured in those national consumption numbers.
Another rebuttal to that.
Oh, very briefly.
Yeah, briefly. GDP is about domestic production. So if you're importing, that actually is a negative impact on our GDP, not a positive impact on our GDP. So you are actually arguing that if there are more imports, that our GDP is actually way less than it should be.
Okay. Any other questions, comments?
Yeah, so just 2 minutes as the mic is moving. I think what's unsaid when you talk about imports reducing GDP is that the income that is allowing these traders to actually bring in those goods and services is actually happening from within the country, people trading or doing business in the informal sector. So all that income is not captured anyway. And it's more than the import amount.
I sense a rabbit hole coming up. Would you allow the gentleman to ask this question?
First one would be can you actually define skills? You mentioned about skills.
Okay.
Now, I was in another country, and well, one thing I've seen compared to Zimbabwe and those countries, actually, I was in Turkey. No, the Turkish people, they thrive in volumes and small margins, but their businesses are thriving. But for a Zimbabwean, these are what we are known for: overpricing, high margins. I mean, are these the skills that we have? We have what type of skills? Maybe you could define the skill that we are saying we have. Maybe that's the first question. Maybe
maybe just ask both of your questions.
Okay. Then I stand to be corrected. I was just I had a conversation with someone, I think from UK, and he says he was called by a group of Nigerians. I mean, they called him as a representative of the Zimbabwean economy. I mean, the Zimbabwean people in UK, and they were consulting about the Zimbabwean situation, the economy, because they want to heavily invest in Zim. Now, it's not only the Nigerian community, but we are looking at a number of people who are looking at Zimbabwe from an outside perspective, I don't know. And they're seeing the greener pasture. But here, we are saying, let's go out. So I'm just saying, where are we missing? Could it be that these guys are seeing what we're not seeing, or are they thriving, or is it a lie that's being sold outside? But I would tell you, a number of people, they want to come to Zim to invest. So what is it that we are not seeing, perhaps?
So maybe you can take the first one on skills, and I'll take the investment one.
All right, fantastic. That's a very good question. Eh? So when I say skills, I actually meant human skills. So I make the distinction between business and human beings. So the human beings is the skill set. So the artisanal skills, for example, are in high demand right across the world. And this might be unusual, but it turns out that in Southern Africa, we're the only country that was still producing artisanal skills. And right now they're in high demand right across South Africa, Canada, UK, wherever. So that's number one. Then when I meant businesses, it's a competence. When we say competence, let me just give you a very rough one. It's you're borrowing in US dollars in Zimbabwe, and you've learned to pay back at 12% interest rate, and you survived that. Imagine the same business going into the UK. Right now, let me tell you, in the UK, you're being given a loan at 2%. Did you think that if you were able to manage in a highly interest rate environment and you could wiggle your way around, that's the competence I meant. That when you're now going into an environment where everybody's crying because their interest rates have increased from 1% to 2%, and they think that, the sky is falling, you've built some sort of competence. That's all I'm saying. And the other thing is you keep on, remaining in when the market, because the credit market is the most important function in an economy. The credit market is squeezing. Then that's the only way you can make your money is through high margins. But if you're in an environment where the credit market, then you're better placed at explaining leverage, how leverage actually improves your return on equity, right? So if you're highly leveraged in a low interest rate environment, to a Zimbabwean it's a low interest rate. Take me to Kenya and you give me interest rate of 6%. That's like
money for free.
Money for free. That's the competence I was really talking about. That businesses in Zimbabwe that are operating in Zimbabwe have built a certain competence over the last decade or 2 decades, that if they were to export that competence to the rest of Africa, unfortunately we haven't seen a lot of it, but if they were to do so, I think they would do very well. And I would say Zimbabwe is in a case that South Africa was in the year 2000. And this is the warning that I give to Zimbabwean businesses, that in 2000, South Africa had a very good opportunity to go into the rest of Africa, right? They had the capital, they had GDP per capita was way ahead of everybody else in Africa, but they didn't. And guess who took over? The Chinese. And the Chinese have done so well that the banks in South Africa are now owned by the Chinese. But South Africa had that position. And I think that with the little capital that we still have in Zimbabwe, we are in a good position to place ourselves to the rest of Africa. That's my argument.
Yeah, can I push back a little bit?
Yeah.
I think I think it makes a valid point, and it reminds me of an interesting anecdote, of a friend of mine who, in the high inflation years, 2005, 2006, emigrated and went to work in South Africa. And he was at a firm here in Zimbabwe where he was the chief investment officer. And that's what he put on his CV. And he was going for interviews. And he's sitting in one interview, and the guy's going through his CV, and he says, so you're the chief investment officer, you're 30, what? And then he says, look, can you see that old guy over there with gray hair? Yeah, that's our chief investment officer. How are you wearing a hat as a chief investment officer in your early 30s? And I think this, and he had to obviously make some adjustments to his CV, and he changed chief investment officer to portfolio manager. And, but the point is, and I think, is that we live in the twilight zone here in Zimbabwe where we've got ridiculous margins, things don't work, and we figured out how to navigate those waters. But in the rest of the world, it's competitive, it's professional, it's serious. And so, yes, we can navigate with these high interest rates and with this madness, but that doesn't mean that we are competent to go to Joburg or London or Lagos and compete with people who've been at it.
Okay, now you guys are leading us down a rabbit hole. But I think yes, you're right, and the gentleman is right. But not every competence is ideal for every environment. Right? So I think Tinashe's point is you've got a competence. Now find markets in which your competence is an advantage. I'm involved with a business that trades all over Africa. I'll tell you what, with US dollar inflation and supply chain problems we've had over the past few months, we've cleaned up in all our markets because prices are going up. So what? It's what we do every day. Our supplier doesn't have product. So what? We know how to deal with this. Whereas our competitor next door is actually sitting there and closing the doors because they don't know what to do. They've always got the product from there, and that guy doesn't have.
Supply chain problems.
There's a problem at the border. The guys want to be talked to nicely to allow your stuff in. Okay, can I take that talking to the guys at the border skill to Canada? I might get arrested. But if I go into another small African country, I'm going to be at an advantage. You asked a question about investment. And we've talked about this on the show before, right? And it kind of links nicely with what we just talked about, with competence in choosing your markets. There's different kinds of capital, a whole range. There's very clean, patient capital that usually comes from institutions and pension funds. They come and give you money, they don't bother you, they come to board meetings, they talk in very flat tones and encourage you to do better next quarter. That's on one extreme. On the other extreme, you have very dirty money that is trying to get washed. Somebody comes with a suitcase, says, here's $100,000. I don't care what you do with it. Just make sure that over the next 6 years, you put $15,000 a year into my account as a dividend. Very hot, very dirty, and all sorts in between. Now, the riskier your country gets, the more you're getting this kind of buccaneer capital. So if it's not dirty money, it is very abusive money. It's the kind of investor who's coming and saying, I was actually talking to a relative of mine this morning, because of this whole January disease thing that's been going on around the country and cows have been dying. There's a few guys that have figured out how to treat cows with January disease, and they're showing up in a village and offering villagers $40 for a dying cow. It's investment, right? You save an asset. So that you will never stop getting investment. But let's understand the quality of the investment. What kind of investors are we attracting? Let's understand the quantum. Let's look at our national statistics and look at our FDI versus what it has been in the past versus what our peers are getting. Even in 2008, when there was no electricity and this whole country was dark, we received some investment. So we must be careful. When we say there's no investment, it's not to say there's absolutely zero. There will always be something, but is it the quantity and quality that we want?
Apana kana chikafu.
Hey, indlala hey. Bazasibulala ngendlala wanhlaba.
Andikho ukubikileko.
Asabe.
Imukubike makabeji.
Ifuna usibulalisa ngendlala
Kwethe sekuru.
Bayiza bayenyarazo bayathatha imali. Bayabuya kathisi nje so.
Ngoyile kunyaraza.
Wonke sekuru.
The Sawira Connect card, connecting you to an easier and more convenient way to receive your funeral grocery allowance. Wipe away delays. Say goodbye to payment interruptions with just one simple swipe, 24/7. The Sawira Connect card made for your convenience. Anytime, anywhere. Access made easy. For more information, connect with us today.
Any other questions?
We've got elections coming up. Very soon. Are they likely to? What is the? What is likely to come out of that in terms of the economy? Whether it's interest rates going up or going down.
I thought you were going to ask us to predict. Who would like to take that?
Yeah. From an economic perspective, there's only one thing that we're interested in. Engagement with the international creditors, international countries. So an outcome that gives that engagement is one that's positive. An outcome that does not give that engagement, it's more of the same. More of the same. So, and there are many permutations. If you read through what political scientists are coming up with, very interesting things. There are many permutations. It's not just true that it's this party or this party winning. There are many permutations. So I'm not a political scientist, but if you read through what real political scientists are doing, they've given us many permutations. And I've sort of given them back that from an economist's perspective, whichever permutation you have, there's only one that can help Zimbabwe, is one that has full engagement with the international community. And full engagement with the international community is the difference between a Malawi and a Zambia. I think we've all seen that. That's the significant difference. That Malawi in the last week, the IMF has actually said that they're not going to give them any bailout money, right? And because they have not done what is necessary. 2 weeks ago, we saw what happened with IMF. A second tranche of 1.3 billion into Zambia. Creditors sitting around the table and getting a second bailout and debt forgiveness within 15 years. This is the second time that Zambia has done so. But what I found very curious, and this is for us as when we read through what the international media is saying, is the IMF president actually came out and said that we're going to support Zambia, we're going to support it in its social agenda, which I thought was very unusual for IMF to actually say that, because that's not usually what they do. It's usually the World Bank. And my reading is there's something to what Zambia has done and what Zambian leadership is doing, because I actually don't believe in the political change that happened in Zambia. I think it's a lot of...
We're not going to have that discussion.
it's a caveat that's necessary. What I'm trying to say that even I am pleasantly surprised that the international community is willing and ready to engage people who are serious. So whatever political change happens in Zimbabwe, that's what we're looking for. Whatever the permutation is, we're looking for leadership that is ready and willing to engage. That is what will propel them. Without that, we're now in a debt trap, which we didn't have in 2009. Now it's real. Part of our problems with, the auction flow, right? Part of it is trying to pay off some of our debts. So whatever we're earning as a country, there's certain debts that we just simply need to pay off. The Chinese, Afrexim Bank at high interest rate. Afrexim Bank is northwards of 12%. It's not the same that we enjoyed in 2008. So whatever the permutations, there's only one thing I'm looking for: full engagement with the international community. Without that, it's more of the same.
I have a much more optimistic take. So I think that...
You say it in fewer words, though.
I'm not given to pontificating. So I think, I don't think re-engagement is the real issue. I think that economic reform is the real issue, and it's a long, difficult, painful road. So I don't see us doing any serious economic reform between now and the election. I think after the election, there might be a review, and the willingness for us to make economic reforms, I suspect, will be higher. Whatever the result of the election.
I love your optimism. We have been compounding economic mistakes on others since 1963, 64.
65.
No, before UDI. How long has Smith been in power?
About a year.
About a year, right? So since about 64, we've been on a path of bad economic decisions. So I love your optimism that all of this might just change in the blink of an eye because of an election. Any other questions? One in the front here.
Right, thank you. So in the preamble to the discussion, we spoke briefly about the fact that globally things will be stormy, a bit rocky for the next couple of years. There's issues around interest rates, energy prices, the contribution the war in Ukraine has had, and unsteady stock markets globally, right? And Zimbabweans, we've tended to actually think, and a lot of people in Zimbabwe now think of buying property outside, putting money outside, investing outside, because this is an unstable environment. Right?
Be careful that you don't say that too loud.
My question is, number one, given that it looks like globally there may be some shake-up happening versus what's happening in Zimbabwe, is it a good idea for Zimbabweans to still be thinking about putting money offshore, investing money offshore, in offshore stock markets, offshore trading platforms, etc., versus actually just staying put here and trying to make things work in this unpredictable environment? And secondly, to what extent, I know we are a pariah of sorts, and we have been dysfunctional even whilst other places have been functional. To what extent do global changes influence what happens here? How insulated, how immune are we because of our isolation and dysfunction. And any of the three of you can take the question.
Okay. You wanna take the first one? But before you do, because you guys have a way of getting us in trouble, I will preface his comments with, we have exchange control rules, and whatever you're doing must be within the confines of exchange control law.
Yeah, so I think the question really is a function of the relative stability of the two Zim versus the rest of the world. So, I mean, there's a lot of noise about high interest rates, about high inflation, but compared to us here, that's actually quite tame. That's actually quite mild. And it's an aberration. You know, the inflation rates that we're seeing in the UK and the US at almost 10%. You know, this is the first time it's happened in almost 40 years, and chances are it's going to revert back to normal over the next couple of years. You know, there might be a bit of turmoil here. So just from just to take a bird's eye view, right? That argument that was true 2 years ago, before COVID, before the war in Ukraine, it's still true throughout that period, that Zim will always be less attractive, less safe than the rest of the world. Just from a, you know, if you were hypothetically sitting with $1 million and you had a choice of allocating some of it to Zim and some of it to the rest of the world, it will always make more sense to allocate all of it to the rest of the world.
I don't know you guys. I'll take the second question. The rate, the extent to which we are affected by what's happening in the rest of the world is high. First of all, the world is connected. Secondly, our biggest earners as a country are minerals and diaspora remittances. So there's a very, very direct link between our earnings as a country and our, I'll say, our client markets. It's the markets that we sell labor to in the form of our children, and it's the markets that we sell minerals and other commodities to. If they're doing well, or whatever is happening there, if it's resulting in higher prices and higher wages, we'll benefit. And the reverse will also be true. Would anybody else like to?
An interesting anecdote to what Rufaro said is, on our WhatsApp group, I sort of asked the investment professionals where one should put their money, whether in Zim or outside of Zim. And the one suggestion was a company, you know, somebody said, you know, the stock market right now is pretty low. I think it's a good buy. And I was like, okay, what's your target price? And it was a 3 times return. I thought, oh, very interesting. And someone else said, no, I think internationally you can get a better return. I was like, you know, what sort of return? 10 times, right? And I was like, 10 times? Why? And they say because of leverage. I think Zimbabweans don't realize the power of leverage.
Okay.
Yeah. Leverage changes everything.
So leverage is a fancy word for borrowing.
But it's not for consumption ends. It's for that you have call options. Elsewhere around the world, you've got warrants, call options, a whole assortment of platforms, which make, while the Zim return in absolute terms is great, but when you consider the risk, and when you consider that there's no leverage whatsoever, and elsewhere you've got all these platforms that are open to you, it changes perspective.
Yeah, so just to give you an example of what he's talking about, if you're buying shares outright and you buy $100 worth of shares and they go up 5%, you make 5%. But $5, 5%, right? But if you don't buy the underlying, because most of these sophisticated markets like the New York Stock Exchange or London, you can buy call options. So for the same amount of money, if the share price goes up 5%, you make 50% because you've bought a call option instead of the underlying. So there's these, you know, so that's how it manifests in terms of the actual product that you can buy.
Tashi, you introduced risk, and I think that's worth spending a bit of time on, just so also people understand why perhaps we might be coming across as unpatriotic or negative about the country. But there's a financial concept called RAROC, risk-adjusted return on capital. So you compare, somebody takes $100 and goes and plants cabbages. And they sell their cabbages and they get $120. Somebody goes to the horses and bets $100 and they win 20. End of the day, they're up $20. Is it the same? Are these two investments the same? Which 20 is worth more? Which 20 will you buy? The one on the horses or the one on cabbages?
Horses.
You'd rather go to the horses?
Do we know these people?
Okay. I'll be international now and pontificate for a bit. So, the risk-adjusted return on the horses is much lower than the $20 because you've taken a huge risk to earn the $20. There's a high probability you could have lost everything. Whereas the probability that you'd have lost everything on the cabbages is much lower. So the $20 on the cabbages is better quality than the $20 on the horses.
So you're basically calling our country
well, a former governor of the Reserve Bank, I think when he was still governor even, wrote a book called
Casino Economy.
So, I mean, look, if we get an opportunity to talk to policymakers, what's very, very important for us to do is to reduce the risk. You know, we're talking about where the investment is coming, why it's not coming. We're having discussions here with ordinary middle-class Zimbabweans who are thinking about taking their money out of the country. This is all speaking to risk. And nobody needs to teach you risk. You just know it. I mean, the cabbage horses example, have that with a 10-year-old child. They intuitively know. They'll go with the cabbages. So nobody needs to teach you about risk. The only thing as a country we can do is to reduce it. If you can still offer high-quality opportunity, like the gold mining, it's a high-quality opportunity. Yes, we are yielding less, but our mines are much shallower than the South African ones. So anybody who wants to mine gold, choice between South Africa and Zimbabwe, if you take away the likelihood that a bunch of people with machetes wanting to take your gold back, they'd rather mine gold in Zim any day than in South Africa. If you want to start an outsourcing business, a call center, for example, or something like that, we've got the right time zone. We've got people that speak English very well, that are well educated. You'd rather do it here than in India. But there's a high probability that while you're in the middle of a phone call, so if we deal with these issues and reduce the risk, the country becomes a lot more attractive.
Control risk, I've got a report coming out, I think this week, 22. So they do, control risk is an organization based out of the UK, and with Oxford Economics, they do a risk reward analysis of the African continent. So all of the different African countries. An interesting one is Zimbabwe, where Zimbabwe is always placed. And Zimbabwe is always placed with the high risk. So the high risk, you've got DRC, Cameroon, Zimbabwe. On return, Zimbabwe is low. So Zimbabwe sits on its own, where it's high risk and low return. Whereas the DRC is high risk, high return. So yeah, I agree with you. Policymakers it's not about, it's about reducing the risk. And there are a number of things that you can do. Consistency in policy. Just simple, straightforward consistency in currency. I mean, how many countries do you know have changed 5 currencies in 10 years? Nigeria?
No,
They still
have the Naira.
Naira. That's a good one.
But so maybe in closing, remember, I mean, we went all over the place, but really want to talk about strategic planning. As people are going into this final quarter, having these discussions in their companies, in their boardrooms, how should they be going about it? What should they be thinking about? So this is not an opportunity to start a new show, Smith.
Oh yeah, no. I think they should look at the risks. They should be very much aware of what Zimbabwe, call Zimbabwe for what it is. No optimism. Just think of it as if you were Zambian and you look at them, and there are opportunities within your businesses, within Zim. They are there, but have a very realistic view of Zim. But more and more importantly, please use your competence across the African continent. And there's even as industry, there's this, I think we've spoken about it, and I think we need to speak about it a lot. Kerutsu. What was it? Keretsu. The Japanese Keretsu. It's about our industry. It's export driven, but they move as a cluster. So it's not just one Zimbabwean company going to Zambia or to Mozambique, but they go as a cluster. The banks, the manufacturers, the whole value chain and supply chain, they moves in. And I think that's something that we need to do as a country. That's where my optimism lies, that we've built a certain competence, and I think let's use it. So I'm preaching because I'm hoping that in your strategy sessions, you start thinking about going across Africa.
Yeah, I tend to agree with him. There definitely is opportunity beyond our borders, and one of the indictments of Zimbabwean business has been its reticence and being inward-looking instead of actually exploring the opportunities that are beyond our borders. But I think we are certainly between now and the election, it's going to be choppy waters. So if you're running a business, you ought to be thinking about battening down the hatches, a leaner structure, paying off debt, just being in a position to survive until after the election.
I'm not sure I agree with him about focusing on survival. I'm leaning more towards Nashe. The country is predictable in its chaotic nature. So, yes, there's going to be an election, but the same things are going to happen, right? There's going to be currency craziness. There's going to be overspending by the government. We've all seen this story many, many times. And for whatever crazy reason, we stop our lives for a year because there's going to be an election. And the election comes and goes, and nothing changes. Samuel Beckett says, nobody comes, nobody goes. It's awful. So I'd say run your business, run it well. As he says, take the country for what it is. It is actually predictable in its craziness. And pedal to the metal. When everybody else is withdrawing, be on your front foot.
You're channeling Warren Buffett there. When others are greedy, be fearful. And when others are fearful, be greedy.
But, you really shouldn't take us too seriously because we have no idea what we're talking about. We're just 3 friends having a drink on a Friday afternoon, although today cabs wouldn't let us have drinks in the auditorium.
Yeah, this is what happens when you let Ranga choose a venue.
But we are grateful to cabs for hosting us. Thank you very much for coming along. It's been lovely. Have a lovely weekend. Stay safe. Be good. If you can't be good at it.